Hello guys, I'm Paras, the options guy, and welcome back to today's episode of the No BS Trading Podcast. This is episode number 13 of the podcast, and today we are gonna talk about many interesting things about how, first of all, the Fed is ready to cut rates finally after a long time. And then we are also going to talk about the very two interesting IPOs that are going to come in the market next week. And alongside that, we are also going to talk about what are the major news points or the major events that you need to keep in mind for the next week, which are going to be important and which are going to affect the markets. So without any further delay, let's just start with the episode. Now, the previous week, we heard a lot from the Fed and its members, starting off with the Fed meeting minutes, which were on Wednesday. And now I'm going to tell you a few important points, the major points that came out from the Fed meeting minutes. First of all, was that majority of Fed members feel that it would be appropriate to lower the rates in the next meeting if the data remains constructive. And we also saw those signs coming in before itself, where a lot of people were expecting that the Fed will finally cut rates in September, and it looks like most of the members in the Fed are thinking about cutting rates in the September meeting of the Fed. And then second thing, they said that recent data has enhanced confidence over inflation, which is pretty obvious. Then what was a bit of an interesting thing is that several participants considered a 25 basis point rate cut in July itself, in the July meeting also. Although we didn't get a rate cut over there, but several participants were already considering it in the previous meeting also. And then after that, majority of participants said that unemployment risks are rising. And if you remember, I had showed you guys the chart of unemployment and its 36-month average a few episodes ago, where I said that whenever the unemployment rate goes above its 36-month average, we see a very big spike in unemployment, and that has already happened a few months ago. That means unemployment is now going to become a serious problem soon. Most probably it is going to become a serious problem, so we will definitely keep a very close eye on how the unemployment rate is coming. Okay, after that, if you see, what was also another thing is that interesting is that outlook for the economic growth in the second half of 2024 was marked down. Although not very seriously, it was marked down by the participants. I thought, Fed would be a bit more confident about the economy, but it looks like some members are finally seeing the reality. And I've been showing you guys the reality in many data points before itself on the podcast, where I said that the consumer is not getting very bullish, or the consumer is not in a very healthy state, or the consumer is getting weaker and weaker. So, so it looks like a lot of the Fed members are also seeing that thing. After that, another thing which is sort of a no-brainer is easing too late could unduly weaken the economy. I mean, if you are too late to cut rates, maybe the economy might also go into a deep recession, which is pretty simple, very understandable. After that, one more thing which came out was the jobs data revision. Now, you see, there is the NFP data, which you would have heard about, the non-farm payroll data, which says that how many jobs were added in the US economy, or how many jobs, basically how many increase or decrease of jobs happened in the US economy. And what we saw in the revision of this data, basically every year there is an annual revision where the data is revised for the whole year if there are any changes. So if you see, this time there was the jobs data revision date. Basically, the revision came out and more than 800,000 jobs were marked down from the initial estimate. So every month, or every few weeks, you see this non-farm payroll data where you hear that 230,000 jobs were added, or 150,000 jobs were added in the US economy. So the whole annual figure that comes out, in that 800,000 jobs were actually removed from the estimate. They were marked down. That means the you can say BLS, okay, the Bureau of Labor Statistics, which provides these statistics and data points, they actually were very wrong by a pretty big margin. They overestimate the amount of jobs that were added in the US economy by 800,000 jobs. And that is one of the things, or one of the reasons why I do not tell you guys to look at the non-farm payroll data. That's why you would have heard I do not talk about the non-farm payroll data, because the reason is that or you can say the thing is that it is not very reliable in my opinion. And you could see that right now when the jobs data revision came out, where 800,000 jobs were actually marked down. That means 800,000 jobs weren't even added into the economy. And you have to sort of ask yourself, if the very very big financial institutions, or even Fed, who say that they are going to rely on data for taking further action, if they rely on data like the jobs revision data, how will we get any sort of accurate action from those guys when the data is also so wrong and is being revised by such a huge margin? If it would have been, let's say, 150,000 jobs, I would have been like, okay, that is fine. But marking down your estimates by 800,000 jobs is a big deal. But still, I hope you guys now understood why I don't talk about the non-farm payroll data. After that, on Friday, we had the Jerome Powell speech at the Jackson Hole Symposium. Now, Jackson Hole Symposium is sort of the big boys club where every other billionaire in the world comes and meets everyone, or the big people from the economic standards come and meet, and they talk about different issues in the world, whatever. We don't care about that. But Jerome Powell also comes and gives a speech because he is the most powerful man in terms of economic power in the world right now, because he is controlling the biggest central bank in the world. Not controlling, but he is the chairman of the biggest central bank in the world. But the most important line which he said in his speech was, "The time has come for the policy to adjust. The direction of travel is clear." And that sums up the whole speech. After that, nothing else was said which was particularly interesting or particularly of more importance. This was the most important line, and that was what the market wanted to hear. As soon as as soon as Jerome Powell said this, Dow Jones shot up more than not more than 1%, around about 1%. Nasdaq shot up more than 1%. So Jerome Powell is also saying that the time has come to start to cut rates. Now, the pace and timing of the rate cuts will definitely be decided by how the data comes in, how is the economy doing going forward. But it looks like September meeting rate cut is finally confirmed by Jerome Powell, and that is why I think the markets also rejoice, because 25 basis points of rate cut was already factored in. What the market needed was confirmation from the boss man himself, who is Mr. Jerome Powell, and he gave that confirmation today at the Jackson Hole speech. So what does this mean? Now, if you see, now I'll put a LinkedIn post in my description. Go check it out. And I've told in that post what happens after the rate cuts happen. Okay, what happens to the markets after the rates start to get cut. And most of the times in history, there has been a correction in the market, there has been a fall in the market. In the last 3 rate cut cycles also, when the rates have been cut, the markets have started to fall. Okay, so this is one of those very concerning things, which is also, so I am not worrying about it, but this is something that you definitely need to keep in mind. And whenever the rates are being cut, when the economy is slowing down, it is not a very good thing too. Okay, so that is why, if the rate cuts happen in September, which most probably is a chance, you can say it's sort of like a 99% you can say probability thing. So rate cuts are happening in September, chances are we may also see a top being made in the market in September or around that time soon. Okay, so keep this in mind, keep booking your profits. We are already at an all-time high. If you don't book your profits over here, then chances are you might lose a lot of your gains, maybe even come in negative. So always come into cash when you are seeing profit. Come into cash at least a little percentage. Okay, if you let's say have a 100 rupees portfolio, at least book 20 rupees. Okay, at least come 20 rupees into cash and then let that cash rest. Okay, I would say come 40-50% also, no problem. I've squared off 90% of my portfolio. Okay, I just now have a few nifty bees that are left, which I will probably also square off soon. But yeah, aside from that, I've squared off everything, or you can say I've sold off everything, and now I'm sitting mostly on cash because I want to book my gains. Always remember to book your gains also. Please do not be that perma bull who always just holds their stocks, because when the bear market hits or when a correction also hits in the market, a general 10% correction in the stocks, not in the stocks but in the indices, the stocks will correct much more than that. Okay, so keep that in mind, please. So that was it for this week. Now let's move on to what is going to happen in the markets next week and what are the major events that you need to keep in mind. Now, next week we have a few data points that you need to keep in mind, although it is nothing like a busy week, but still, I'm going to tell you one thing which is important. Now, in today's Jackson Hole event, okay, or the Jackson Hole speech that Jerome Powell gave, he has set the precedent that the economy is becoming weaker. Okay, the economy has started to show signs of a slowdown. Now, if the economic numbers come out much better than expected, or just a better than expected, then the Fed will be in a dilemma, because Mr. Jerome Powell over here has said that economy is weakening. Again, he has said that rate cuts are sort and are then needed. But if the data tells you that the economy is not weakening, then what do you do? Okay, so that's why the economic data points that are going to come from the US, majorly the GDP data, the inflation data, and also you can say the retail sales data, all of these are going to be pretty important for the next 1 month until the Fed cuts rates. Okay, or until the Fed September meeting. Okay, so please keep these data points in mind. For the next week, we only have two data points from the US. First of all is the US GDP data, which is expected to come out at 2%. The Q2 GDP data, which is expected to come out at 2.8%, which is on Thursday. Okay. Now, if this data comes out a bit weaker than expected, below 2.8%, this is still a fine thing. Okay. What we don't need is a very high data as compared to expectations, because then the Fed, as I said, will be in a bit of a dilemma, thinking that should we cut rates or should we not cut rates. And then on Friday we have another data point. First of all, we also do have India's GDP data too, but it is not as, you can say, important. Market most of the times doesn't react on that data until and unless it is like very much off the charts, but that also does not happen most of the time, so it will just be something that you can just look out for. Okay, don't try to react over it or think that this will be a big thing. Just look at what the data is coming, because that will also give you an idea about how India's GDP is growing. But yes, after that, the important data point is the PCE price index, personal consumption expenditure, which is similar to inflation. Now, on a month over month basis, it is expected to come at 0.2%. Okay, if this data comes out higher than that, again, as I said, the Fed will be in a bit of a dilemma, because if the inflation is rising and they're cutting rates, what does that mean? Okay, it means that they are just putting, oil into the fire, right, which is not going to be great. So keep in mind the PCE price index. If it come on a month over month basis, it is expected to come at 0.2%. On a YOY basis, we don't have a expectation as of now, but still the previous one was at 2.6%, the previous reading. So at least it should come out like 0.1% below that. No, 2.5%, 2.4% at least, so that the Fed gets a bit more confidence that the PCE price index is also coming down. But aside from that, we don't really have any other data points that are coming in or any other events that you need to look out for the next week. So now let's move on to the two IPOs that are going to come in our Indian markets, because they are a bit interesting and we need to talk about them. So yeah, let's move over there. Now, the two IPOs that we are getting next week are the Premier Energies Limited IPO and the Eco Mobility IPO. So, we are going to talk about both of them, but first, we are going to talk about the Premier Energies Limited IPO. Now, this is a 2,830 crore IPO, a pretty good big IPO, out of which only 1291 crores will go to the company, and other 1539 crores is a stake sale by the existing promoters. The IPO will open from August 27th to August 29th, and what the minimum the investment will be somewhere near 14,850, the minimum investment. But still, let's move on to how is the company doing. First of all, let's talk about the GMP perspective or the listing gains perspective. If you are applying for listing gains, should you apply to this IPO or not? And the answer is yes, definitely. The listing gains is going, the gray market premium is estimating a listing gains of near 67%. So a very, very good bet in considering how the gray market premium is moving. So if the gray market premium sustains near 67%, just doesn't go below 40%, then definitely apply in this IPO. It is a pretty good IPO in terms of listing gains. Okay, now Premier Energies, in terms of listing gains, as I said, a very good IPO. But how is it in terms of fundamentals? So first of all, let's talk about what the company does. The company manufactures integrated solar cells and a solar panel and solar panels. So basically, it is into solar energy. Okay, and it also provides a lot of you can say solar energy solutions, with, as I said, manufacturing solar cells and solar panels. Okay, but the main few, you can say, customers of the company are NTPC, Tata Power, Panasonic, and many others, right? Shakti Pumps, you would have heard about it, and other, sort of, you can say, reputed companies like this. But if you see the growth in the company's revenues, if you see 31st March 20 from in March 2022, basically in FY22, it had a revenue of 3,700 crores. In FY24, it had a revenue of 3,100 crores. So it is not a great, you can say, increment in the revenues of the company. In FY23, it had actually a revenue of only 1,400 crores. So a bit of a jitteriness in the revenues. Another thing is that in the profit section, if you see, it had only made profits in FY24. Before that, it had a loss of 14 crores and 13 crores respectively in FY22 and 23. So profit after tax also has gotten into, basically the company has made profit in FY24, and as of 30th June 2024, it had another profit of, you can say, 200 crores after FY24. So the profits are definitely increasing, and what we need to say is how is the trend going on in terms of revenue. Now definitely the revenue has also started to pick up. So should you apply to this IPO or not? And the answer is you definitely can apply to this IPO, but only invest in this company if you get it at the price of the IPO. If you are going to buy in the open market when the company is already up 50%, then it is not worth it. Okay, if you are getting the IPO at the IPO price, basically, sorry, if you are getting the IPO, if you are getting the shares allotted in the IPO, then it is a great deal. But aside from that, please do not apply in this, please do not invest in this company at a very high price when the stock gets listed on the exchanges. If you want to apply, then wait for some sort of a correction, and then as a few quarters pass, look at how the trend of the revenues is going on. But yes, definitely, in terms of financials, as of now, the previous financials look a bit jittery, but I think the company can catch a bit of a consistent consistency and pace, and then continue to make healthy profits. But one thing that you need to keep in mind with companies like these green energy companies or solar companies is that they rely heavily on what the government does. The regulations over here, or the government support that the company needs, is going to be important. So what I want you to understand is that if the government tomorrow announces something adverse, like maybe they are not going to support solar energy as much as they did in the last few years, right? Maybe they are decreasing the expenditure for solar energy and all that stuff, the company can get heavily affected over there. So please keep this in mind, and please keep the news that that you get from the government regarding solar, basically the whole solar industry. And if there are any sort of big changes, then the company can get affected definitely. But until unless the government is supporting solar energy, it is a good bet. I can it is a pretty good bet in the solar energy space, because the company is also pretty established, is a pretty established player. Okay, so that is for Premier Energies. And now talking about Eco Mobility IPO. So what this company, okay, let's first talk about the listing gains. As of now, the listing gains are not available in the gray market, or the, you can say, the data is not available in the gray market. So if let's say the data gets available tomorrow, or on Monday or on Tuesday, whenever the data gets available, you can check on anywhere on Google. Okay, just type Eco Mobility IPO GMP and you will get the data, or you will get how much gray market premium is going on. If the listing gains, estimated listing gains, are higher than 40%, you can definitely go ahead and apply in this IPO from the listing gains perspective, if you want listing gains. But if you want to invest in this company, how is this company? So the IPO, first of all, is an issue of 601 crores, out of which all of it is just offer for sale. That means the previous existing shareholders are offering their shares for sale, and it is sort of you can say fine, because the company doesn't really need a lot of cash, and I will talk about that in the coming few minutes. But yes, the company the IPO is going to open from August 20th to August 30th, and the minimum investment will be somewhere near 14,690. Okay, so what is the what does the company do? So what this company does is that it provides rental car services. Okay, it provides chauffeur driven rental car services. Basically, you will have a driver of your own and he will drive your car, your rental car also. So it does that too also, and it also provides employee transportation services. Now you would have seen the very big companies like, let's say, Deloitte or whatever, right? What these companies do is that they provide benefits for their employees, like transportation benefits, where they will pick up and drop you at your home. Okay, so the company also provides those services. It will partner with those big companies and provide them these services, and it has many big clients from the Fortune 500 companies also. So that is something, so good, you can say, client base that the company has. And the company actually services over 1100 organizations in India as of FY24. So a very, you can say, wide client base that the company has. It also provides self-driving, you can say, services, so where it will deliver you the car and you can drive it for your own self. But now, how does the company do in terms of, you can say, financials? Actually, very good, because in FY22, the company made a revenue of 151 crores. In FY23, it jumped to 425 crores, and in FY24, it jumped to 568 crores. So a very, very healthy jump in revenues. And in terms of profit after tax, FY2022 profit after tax was 9.87 crores, FY23 43.5 crores, and FY24 it was 62.5 crores. So a very, very good increment in profit after tax also. Just a very good increment in all sorts of, you can say, measures of financials. So I think the company will definitely continue to grow, because a lot of, you can say, service sector activity is coming in India, and a lot of organizations from outside are also coming in India and setting up their base. So these companies will need even more services like this, the employee transportation services and whatever, right? You get my point. These guys will need a lot of employee transportation services, and so the company has a very very good future in my opinion, at least in India, because a lot of you can say companies from the foreign, they provide these services and they are coming to India to invest and setting up their bases. So future prospects of the company are also very bright. So in my opinion, should you apply to this IPO? I think definitely it is a good bet, and it is definitely going to be a company which can give you a very very good increment or a very very good capital appreciation for your investment. So you can definitely go ahead and apply to this company's IPO. But yes, that was it for the IPOs. Now let's move on to how is the market going to move next week. Now, talking about the market analysis for next week, if you see Bank Nifty only closing up 0.8% this week, and Nifty on the other hand closing up 1.1% this week. But still, this week was a bit of a, you can say, slow week, mostly because of the Jackson Hole event. And if you see, now I'm recording this at Friday night Indian time, when Dow Jones, S&P, Nasdaq, all of these guys are just about to close. And if you see, Dow Jones is closing very much near the all-time high. Chances are this guy will continue to move up and most probably go up till 42,000 from here, because of the very brutal recovery, or you can say very fast recovery, that it has given over here. It has also crossed this trend line. So Nasdaq on the other hand not performing so much, but yes, S&P, Dow Jones, all of these, both of these indices are performing very well. Now if Nasdaq is lagging a bit, chances are that IT stocks from our markets will also lag a bit. So that means this week Bank Nifty can definitely catch a good amount of pace as soon as it crosses 51,500. Now 51,500 to, you can say, 51,350. This area will be the area that Bank Nifty needs to cross to get a lot of momentum. Okay, so in weekly charts, first of all, Bank Nifty looks pretty still. Bank Nifty doesn't look that bullish. As I said, it will get bullish once it crosses 51,500 and sustains above it. If that happens, then Bank Nifty will get bullish, and then chances are Bank Nifty can also show you a very fast recovery, because then the short positions in Bank Nifty will start to get covered, because of which you will see a very good momentum in Bank Nifty also. But as of now, if you see Nifty is looking pretty bullish, and it looks like Nifty might also continue this up move very easily and go up till at least 25,500 also soon. Maybe not in the next week itself, but definitely the way Nifty has made these moves over here, Nifty should go above the all-time high this week itself and not take a lot of time. And for Bank Nifty should also see a very good short covering, given that Nifty is also hitting an all-time high. So the shorts in Bank Nifty would also have a good amount of pressure to cover their to basically cover their positions. So now for Bank Nifty over here, the major level, as I said, would be 51,500 to 51,000, you can say 350. Okay, this zone over here, basically from here till here, and I will make it for you guys also. This zone will be pretty important for the market to cross. Okay, once the markets cross this zone and sustain above it, that is when we will see a very good momentum on the upside. Until then, Bank Nifty will continue to lag a bit. But yes, Bank Nifty now has given, you can say a breakout from this zone over here. So now if the markets come down over here, Bank Nifty market should not go and sustain below this area. If the markets come down, take a pullback, then go up, that is fine, but the market should not sustain below this area. Please keep this in mind. If the market sustain and give a very bearish closing, something like this, below this level again or below this zone again, then Bank Nifty will give a breakout failure, and chances are Bank Nifty then will go very fast and most probably even break this low very fast. Okay, so as of now, Bank Nifty is not looking that bullish, but Nifty on the other hand is looking pretty bullish. Just look at this recovery. Okay, so Nifty on the other hand is looking pretty bullish. Chances are Nifty will first of all fill this gap till 25,000, maybe take a little bit of resistance and then again continue to move. So even on Monday, if you see, you can easily buy above these highs and keep a target of 25,000 on the upside, and then maybe we might see a little bit of a pullback for a day or two, and then we can again see a continuation of this rally on the upside. At lower levels also, if we get a pullback, we can easily take a bullish trend near 24,600. If I go into the 1 minute chart, I can give an exact level which is 24,600 to 580. This area, you can even say 570 or 560 also. This basically 40 to 30 point range, this area will also be very good place to take a long position if the markets again come near this area, okay, if you want to. However, if the markets cross 24,860, 870, basically this day high, and sustain above it, you can go ahead and take a bullish trade also easily till 24,980 to 25,000 on the upside. Okay, so for bank nifty in 1 hour chart, if you see, as I said, this zone on the downside will be important. So what the markets can do is break this both of these day lows over here, and then give a pullback and then start to move up also. That can also happen. So at lower levels, if you are seeing that bank nifty is taking good support, taking a long position for on a positional basis, or even from an intraday perspective, is also pretty good. So if we get a pullback till 50,700, 50,800, this zone exactly, then we can go ahead and take a bullish trade from here again with a target of, you can say, easily 51,350 on the upside. Basically this zone that I've made, okay. And then bank nifty might take a little bit of rejection from here. That is something that we will need to see when bank nifty arrives near that zone. So please do watch my videos, market analysis videos every day, so that you are up to date with how the market has moved every day and what we need to do in the next day. But yes, that was the market analysis, or how the market can move in the coming week. So yeah guys, that was it for this episode, and thank you very much for watching till the end. I really appreciate it, and I hope you guys learned something new from this episode, and I hope I didn't waste your time. But yeah, if you have any sort of feedback on the podcast, for the podcast, and if you want something added, if you want something changed, do let me know in the comments, or just DM me on Instagram or LinkedIn. I'm available anywhere, and I will make sure that those changes are made to the podcast. But yes, that was it for this week, and thank you. I will see you guys in another episode. Bye bye.